Hello everyone, I just want to do a quick video as a lot of people were bottom calling this market, and they still technically might be right, but the action that we saw on Monday is indicative of a market that at least wants to back and fill and not V-ramp straight up, so that's good. But we're going to need to at least back and fill for a couple of weeks, but if we can calm down here, kind of trade in between the resistance levels of the August and October lows here and the recent lows in 2016, I would take that as a potential bullish consolidation, but right now there's just so much overhead resistance with these resistance levels, the other price levels, the 250-day moving average, that I think expecting the market to rally at least before March is a bit absurd, but anything's possible, keeping an open mind. We'll see what happens, but right now the market looks like it just wants to continue to lower. The good news for most today is that volume was lower, as you can see on the S&P 500 with its pullback. First off, all of the indexes closed below their lows of the day on Friday, so they completely erased that big intraday move. The overnight gap they're fine with, but the intraday action was completely taken care of. The NASDAQ, as you can see, very, very poor action, but it had volume below the 50-day volume average. So once again, not a whole lot of severity to the selling, just not good action overall. And of course, the two weakest indexes on the day, the two indexes that you want to see lead, the Russell 2000 down 2.28% today, and the Dow Jones Transportation Average down 1.87%. So until I start seeing the opposite, where these indexes lead and the other indexes lag as we have this pullback go through whatever it needs to go through, I'm not going to be too, I guess, biased towards the bullish side here on the short term, but I have an open mind, and whatever happens, happens. I'm more than willing to play the game. We don't have any sell signals tonight, no covers either. Everything's working and or not working, but not dying either. And then at the same time, a couple of disappointments came through today. I passed on OPHT as a good short position on 113. Whoops, that's now down 12%. I'm getting a lot of that, and can't beat yourself up because of an extremely volatile tape. This is not what you would see during an orderly pullback, during a sideways market, or during an uptrend. This is only something you would see happen where I can't take trades and or trades gap away from me in volatile tapes. That's why on an end-of-day basis it remains very, very fluid situation. And then unfortunately today, ANFI, Amura Nature's Foods, gapped up and ran 29% today. Unfortunately, on the 14th, I was knocked out of it when it traded below this intraday low, 750. So initially, following that 750 low day, you can see here that you got really, once you take out that 200-day moving average, you now have two sell stop levels. You have these lows on half the position and these lows on half the position like I did. However, whenever we reversed that 200-day moving average retake, and then close below the 50-day moving average, as you can see on 114. No matter what, right here, as we move below the 50-day moving average on 111, right here, that's going to take you out of half the position, and now because you violated it at 768, that now becomes your final sell stop back here, because now we've traded below the 200 and 50-day moving average. So either 768 now becomes your final sell stop, or the preferred 751, the one that I use, is your final sell stop. If this stock breaks out above the 200-day moving average, trends above the 200-day moving average, and does not trade below the 50-day moving average before retaking that 200-day moving average, we can still keep two stops on the book, here and here. But at this point in time, enough time has gone by now that if the damn thing isn't going to move up by now, it's probably got something wrong with it and you want to bail. So 114 happened. The stock traded all the way down to 730, obviously taking out my 751 low of day final sell stop. So I'm out of ANFI, and it looks to be a good situation because a few days later, boom, it's now closing below the 50 and 200-day moving average. It's still above the level where we went long here, right here, using this as the low a day. So as long as it's above 680, it technically isn't a terrible, terrible sell. But you know what? Even with it at 813, trading down to 751, overall, it just doesn't look good. But volume was below average, so that's why this move here was not a full sell signal on an end-of-day basis. And just a few days later, it's now gapping up higher, up 29% on the day from our initial long signal. On an end-of-day basis, the stock is now up 36%. hopefully you're still long. Me, I'm long gone, and I left with, I think, maybe like, what did I get? Maybe a 1% gain here? Golly, let's see what it might have been. 2%. So I left with a 2% gain, and things up now 36%. Once again, you can beat yourself up, and or you can recognize that, you know, volatile, downtrending market with gaps and traps everywhere, you know, it's going to happen. For all we know, this is probably a top in ANFI as it probably reverses higher. You can see it traded up to 1146, but managed to close at 1075 on heavy volume. So, you know, there's not a lot of hope that it can continue to go up. But, you know, nice chart pattern. In-a-day basis, I'm still tracking it. On an end-of-day basis, if you're trading it like that, you're hopefully still long. But in this market, not using stops just seems damn criminal to me. And on that end, EBF, moving half my sell stops to today's low a day. The other half remains the low of that base. LANC, first sell stop, now the low a day of yesterday's signal date, and I'll keep the final sell stop right here. If it closes below here, this low, 114 on heavier volume though, that will become my final sell stop tomorrow's low a day or whenever that gets eclipsed. And then OUT still not, you know, we bought it back, and of course it's not acting right, a heavier above average volume sell-off. So not a whole lot going for this market out here. Caution is advised. The only thing that looks like it's going is gold, IAU, iShares Gold Trust, GLD. That looks good. Oil doesn't look good yet, but some oil stocks continue to hold up, and that kind of leads us to our new long position. Well, it's not an oil stock. What am I talking about? EGHT. Never mind. This leads us to our new long position either way. EGHT is a telecommunications stock. It's an integrated services group. It is third overall in its industry group. It is a recent earnings winner with a nice earnings beat on Friday. Excellent follow through today on above average volume. This is the kind of price action in an uptrending market I load the boat in. It's almost Cansom quality. It's got a 65 EPS rating. Earnings per share and sales growth this quarter were very, very strong. Next quarter, they're supposed to be strong, and that will make EGHT a Cansom quality name. So almost Cansom quality, earnings winner, huge volume surge, max green bop. You know, it doesn't get much better than that. It's hitting a new 52-week high, which was one of like 20 stocks today, 20 stocks and ETFs that did that. So it's clearly leading the market by leaps and bounds, and it's a very, very solid overall looking stock. So great pattern in a good, nice uptrending market. This is easily a 5 or even 10% position. If it's 10%, your first sell stop's below 1239, your last one's below 1191. If it's 5%, you can still use 1191 because it's in a strong market. This one's going to go higher. It already had the previous uptrend even leading into the earnings beat. So excellent overall. But because it is, you know, the market that we're in, 0.5% for being my new 52-week highs on above average volume scan, and 0.5% for being confirmed the price volume BOP scan. If this was also already a Cansom quality stock, this would be a 2% position. But as of now, caution is advised. Going to keep it 1%. I'm going to keep it simple. Also, other names that were impressed today, Cray. Cray's been on the top of our watch list as stocks holding up. Cray has been one of about 5 names with like WBMD, PLAB, EEFT, TAST, AEPI that we like. Gapped up today, continue to higher off a contract win, but once again you can see intraday reversal off those highs. And then OA, remember that new long position? It's like I said, it's something that you only see in really volatile tapes. You wouldn't see this in a stronger market, so it is what it is. You can't get too upset about it. Cash is still king here on an end-of-day basis, but intraday in XTD, that was the early morning spiker that we called out in the morning. It worked. Late day dip buy announcement before the closing bell. It worked. After hours, this thing is up to 109. Day trading and intraday plays continues to be the only place where you can perform or seek any alpha in this tape right now. And the day trend following is still kind of dead because nothing is working. And if you look at this chart pattern right here, look at all the big, tall red bars in that middle pane. Where are the big, tall green ones? It's hard to make money on the long side when indexes look like that.